All right, let's dive right in. I want you to picture this. You've got a multi-million-dollar trading system, and it is completely armed to the teeth, ready for a major market crash. Over just one weekend, it builds this absolutely airtight case. But then, Monday morning rolls around, and it's faced with an impossible choice. Stick with the plan, or bet every single dollar on the exact opposite outcome.
So, yeah, that's the big question, right? That's the central mystery we're going to unpack today. We're going to follow the data trail of this really sophisticated trading protocol known as AlphaCore, and we'll see how it navigated one of the most dramatic, whiplash-inducing market reversals you can possibly imagine. And this really lays out the core conflict. On one side, you have this meticulous plan to exploit a market drop, and on the other, a complete all-in bet on a market surge. So the big question is, how in the world did the system get from point A to point B in just 48 hours? Let's find out.
Okay, so let's get into it. To really get why the pivot was so dramatic, you first have to understand just how convinced the system was about its original plan. We're hitting rewind, going back to Friday, when AlphaCore was absolutely certain a crash was just around the corner.
Now, the system's whole strategy was built on this one core concept it called the weekend edge. See, while the stock market's sleeping, crypto markets like Bitcoin are trading 24/7. So AlphaCore uses that 40-plus hour window to gather intel, giving it what it calls information arbitrage, basically a sneak peek at what might happen Monday morning. And let's be really clear here, the system's own internal documents spell it out. This wasn't some wild guess. This was a calculated, systematic plan to exploit what it saw as a major weakness in the market structure before anyone else could even react. And the plan was incredibly specific. AlphaCore assigned these really high probabilities to three key events. It said there was an 80% chance the S&P 500 would gap down, a 70% chance Bitcoin would totally collapse over the weekend, and a 75% chance the VIX, the market's fear index, would spike big time on Monday's open. I mean, the trap was set. And then you see a number like this, and it just ratchets up the tension to a whole new level. This represents the gain on one single kind of obscure VIX call option. A 31,800% explosion in one day. Whoa! To the system, this was the smoking gun. It meant the small group of traders was betting an absolute fortune on a massive, and I mean massive, spike in fear. So what does that all mean? It means the options market wasn't just, whispering about a downturn, it was screaming it from the rooftops. This data basically confirmed to AlphaCore that its bearish thesis wasn't just correct, but that the market was violently bracing for the exact scenario it had predicted.
And there's always a but, isn't there? Even as this bearish case seemed completely airtight, the system started picking up on these weird, conflicting signals. Little tiny cracks started to appear in the foundation of the whole plan. And here's the very first contradiction that popped up in the data: the market's internal health. So, while the big indexes like the S&P 500 were a little bit down on Friday, if you looked deeper inside the New York Stock Exchange, way more stocks were actually going up than down. This suggested, a hidden layer of strength, a resilience that just didn't jive with the whole doom and gloom story. Then came this, a direct contradiction. The system's Bitcoin monitor, the very tool it was using for its weekend edge, flashed this incredibly powerful bullish signal called a convexity breakout. Now, this signal suggested that Bitcoin wasn't about to collapse at all. It was actually about to soar. But this is where AlphaCore really showed how sophisticated it is. Instead of panicking, its trap detection protocol kicked in. It analyzed all the underlying price action and basically said, nope, that's a fake out. It called it a momentum trap, something designed to trick buyers right before a crash. So it vetoed the signal and actually doubled down on its bearish plan. And that brings us to the climax of our story. It's super early Monday morning now, just hours before the opening bell. All the weekend's analysis, all the predictions, all the preparations, they're about to go head-to-head with cold, hard reality. So all weekend long, the operators were following this super strict schedule of checkpoints. They're monitoring Bitcoin, checking the futures markets, getting all the orders ready. Everything was greenlit and good to go for that crash scenario. And then, at 6:06 a.m., the final verified pre-market numbers started to come in. And suddenly, bam! This alert flashes across the system. Correlation breakdown. That's the system's code red. It basically means the fundamental relationships between assets, the very thing the entire strategy was built on, had just completely shattered. It was time for an emergency recalibration. And here it is, the first piece of evidence that just blew the whole thesis apart. The S&P 500, which, remember, had an 80% chance of gapping down to the 644 range, instead gapped up to 648.66. It wasn't a crash, it was a bullish breakout. And here's the second blow. Tesla, a key stock the system was planning to bet against, didn't fall. It surged, gapping up over 1% to $355. In an instant, two of the core pillars of that bearish plan were just completely and utterly invalidated by the real-world data.
So what do you do? What do you do when your perfectly constructed reality is proven totally wrong just minutes before you're supposed to act? Well, if you're alpha core, you don't hesitate. You pivot, and you pivot hard.
I mean, just look at this table. It shows the reversal in such stark terms. Every single position was flipped 180 degrees. The bearish puts, which bet on a price drop, were instantly replaced with bullish calls, which bet on a price rise. The entire mission changed in a flash. And this wasn't just about slamming the brakes on the old plan. A completely new, super aggressive bullish plan was deployed on the spot. Priority 1, go capture that S&P 500 breakout. Priority 2, jump on and ride Tesla's momentum. It even set up a new hedge and brand new kill switch triggers, all of it designed for a market that was suddenly roaring upwards.
So, after that absolute whirlwind of a weekend, what's the big takeaway here? What can we learn from Alpha Core's insane, high-stakes pivot? And this right here, this really gets to the heart of the story. The system's ultimate advantage, its true power, it wasn't its prediction, which, let's face it, was dead wrong. Its real power was its process. It was its disciplined, totally unemotional ability to just accept the new data, invalidate its own thesis, and adapt in an instant. It didn't let ego get in the way of reality. And that kind of leaves us with a final question to chew on, doesn't it? In a world where we are absolutely drowning in data, is the real superpower the ability to forecast what's coming next? Or is it having the discipline to know exactly when it's time to change your mind?